Welcome back. You're watching Commodity Champions. Let's talk about sugar now, where the prices have seen some pressure as compared to the previous week. And this is after the government has asked the mills to supply more, preparing ahead of the festive season. We are now joined by Mr. M. Manickam, who's Executive Chairman of Sakthi Sugars. Mr. Manickam, hi. Welcome to the show. Well, the government is trying to see that the prices do not run up and beyond and has said that they would want the prices at 40 rupees per kg. How do you see that scenario playing out?
I mean, that's not a problem. Then, the consumption will be about 255 because so far I think they've been constraining the consumption. Now, if they're asking the mills to sell more, so probably we should look at a consumption of 255 for the current year. So, and also 260 for the next year. I mean, if that kind of consumption is allowed, the prices will remain low.
Mr. Manickam, also, how do you look at the whole scenario? Because we are looking at a 2017-18 crop at 23.5 to 24 million tons. There is these talks that the government may extend, export of refined sugar. There also is a possibility of more import of raw sugar at zero duty. And within all of that, we've seen the import duty being hiked at 50% as well. Would you say that somewhere there is a bit of a contradiction in policies as we've seen?
Don't we live on contradictions all the time? Yes, there is. I mean, we probably have a closing stock of about 2 to 2.5 million this year, I think, the way we are going forward. Next year, as you said, I think 23 lakhs to 24 lakhs will be the maximum production. If it is 23, then we will probably have 25 million total availability and a consumption of 26. We may have a deficit of closing, so we'll need to import about 1 million and closing stock of 2 million. So my estimate is that we will need to import between 2 to 3 million tons. And the sooner government realizes that and facilitates that, it'll be good. But I think we are just living in a situation where we are thinking that next year we'll produce as much as we want. So I think it's up to the government to decide the best possible outcome.
What is your sense on on what's happening in the global markets as well? Because we've seen prices very volatile there as well. If there is an opportunity or a need to import, what kind of prices are we looking there?
See, if India goes back into the market, we probably will see the prices going up to about 16 cents. They're closer to 15 right now. So, but still there will be surplus because Europe is exporting and there's surplus in Brazil. So this will be a good time for India to import sugar to augment its domestic supplies.
What also is your sense on prices going forward? I mean, we understand on the government's preparedness ahead of the festive season. They want to have enough availability of sugar into the markets. With the we are starting with August and the sugar need consumption would be higher until perhaps Christmas. So that's another 5-6 months. Of course, mills have been told to prepone crushing as well. Given that scenario, what is your sense on prices then?
See, this preponing of crushing is a fallacy. Because, the sugarcane is a crop which matures at 12th month. So just because, somebody decides that they're going to crush earlier, the crop is not going to mature. So you will be crushing underage cane, you will be getting a lower recovery, you will be getting a lower yield. So thus reducing the production. So I don't think we can produce much in October and November. History says that we produce not more than 1.5 lakh tons in October, and November maybe about 20 lakhs. So we are closing with 20 lakhs in end of September. So by about October, we should have literally no sugar in the market. So we will have a shortage, and from November, December, it'll be hand to mouth. Possibly December, we'll do about 50 lakhs, so we'll catch up. So if at all we don't import at this point of time, we will run into a tough time in October, November, and possibly it'll ease out only in December, January.
That doesn't seem like a very good situation as of now, Mr. Manickam. But thank you so much for coming by and making sense of all of those numbers, import prices, and of course, policies of the government as well. Really appreciate that. Well, to take the discussion forward now, we also are joined by Praveen Dongre, who's chairman of India Pulses and Grain Association. Mr. Dongre, hi, good to have you. My first question really is about the Indian pulses crop, which is expected higher. We were talking to the minister as well, and he also said that, yes, there is an overproduction expected this time around. But coming to you, would that also mean lower prices for longer?
I agree with you that the crop in India was also high, as well as in Myanmar and Africa have both harvested good crops. So we will see these prices, these low prices for some time now, but I think the market is pretty much bottomed out. And once the supplies keep coming in, we will see these prices in this range itself for some time now.
The ministry has expressed possibility of removal of export ban. Do you see that happening? Because we've had an export ban since 2007. After a decade, do you think the markets are now ready for it?
Sure, what will eventually happen, but I think it is a very well thought of process if the government is thinking of lifting the ban. And I think that is the way to go, that what is in excess in India, what is selling below MSP should be allowed to be exported. There is a premium for Indian processed material. This will not only give a better, bring more dynamism into the supply chain, but it will also give a better value to the farmers, and also increase, sort of give a fillip or support to the fragmented processing industry. So it will have a multifold impact, and I think goods which are selling below MSP should certainly be allowed to be exported in the processed form.
So if the exports are allowed, what pulses do you think will find buyers abroad?
Yes, tuar, masoor, I think these are the two pulses. Moong, which will certainly find value in the ethnic Indian community, which is spread right across the world. So these three pulses will certainly find homes and buyers overseas. After the ban in 2006, this entire industry had shifted into the Middle East region, where a lot of dal mills came up and a lot of capacity build-up was there, and which were now catering to this market, which was originally, for Indian origin material. So I think opening of exports will certainly create a very fair and transparent price evolving process, which will eventually benefit the price evolution that happens at mandi and farm level. So a clear visibility and a transparent supply chain like this will certainly help bring more dynamism, more liquidity at the mandi levels, and will help the farmers. So removal of stock limits, the government has already proposed, and some states have already implemented. But I think opening up of exports will certainly help on a longer term.
Mr. Dongre, while the minister also talked about the preparedness of the government as we are getting into festive season, also the sensitivity to various stakeholders into the agriculture industry. But when it comes to the wholesale prices, which have seen a lot of decline, do you think not much of that has been passed to retail?
What, of course, is a matter of concern is that the spread between wholesale processed pulses vis-a-vis what is available on the retail, organized retail shelves has just widened. So the entire benefit of these low prices is not yet reaching the consumers. But I think that is a process, and and we will see that correction happening. But at the moment, retail pulses, processed pulses on the shelf are not reflecting the low values of wholesale processed pulses.
Mr. Dongre, that's a very, very valid point. Of course, that is something that the government hasn't talked about yet. But yes, you're right. The spread is really so huge. And that's yet another thing perhaps on the anvil. Thank you so much for joining us and putting out your viewpoints as well. But with that, it's completely out of time on this edition of Commodity Champions. Thank you for watching.